Good morning, everybody. This is Pope Binary here, and today I want to cover a video about the best opportunities to place these out of the money trades that I prefer. And honestly, like I said, guys, these opportunities, they don't happen often, but when they do, you can make a lot of money off of them. Okay, and so I find there are two really strong situations in which you can that honestly prove to be a reliable, risky trade, if that makes sense, right? Uh, it's kind of an oxymoron in that. But uh, let's get right into it. So, the first example I have here, if I see three plus candles, right? If I see three plus candles moving in a certain direction, that is a significant move. Like all three of these candles are relatively huge compared to the last few candles that occurred over here, right, before these three candles arrived. If I see three plus candles that are just significant, that have no sort of consolidation, meaning that the chart does not look like that, it just looks like a straight spike, right? I can generally assume that on the fourth candle, which would be this candle right here that's missing, on this fourth candle, it would either turn out to look like this, or it would either turn out to look like a fully filled red candle, or it would turn out to look like this. And so what that means is I would place a bet saying the candle is going to significantly fall in the next, right? For example, if this candle is forming, I'd place a stake right here saying the candle would fall below this value. And if the candle reaches significantly below the stake that I set, and it either A, bounces off the value, or B, just kind of sort of stops at this value and just stays there for 20 seconds, then I assume it's going to turn out looking like this. If that makes sense. Because what that means is, if, say, this candle was forming, this candle, this red candle right here, say it was forming, it approached this value right here, and then say it bounced up just a little bit and stopped at this value, that means the bulls are fighting for control of the market, and before you know it, the market will shoot back up because the bulls will start taking control again. Meaning that if you had a stake right here, you would need to exit the trade immediately. Okay? And the inverse is true if you're banking off this type of candle. If you just see the market just continue to stay at this value and even push lower, it continues to push lower. And there's no really fight resistance from the bulls. Then you can just assume that the market's going to finish like that, and you can actually wait till expiration. And so, what I'm getting at basically is for these, I don't know what the specific, for these like upside down hammer type candles, you're going to want to put a take profit order if you see the market, the bulls starting to take control. And so I have some examples here that highlight this exact trading scenario. And obviously, this type of strategy, the inverse is true for for bullish markets, right? If you see three bullish candles going in a certain direction, then you can assume there will be some consolidation on the fourth candle. And so let's get into it. This happened earlier on the Australian charts. If you just saw my earlier video where I highlight this spike was the result of a news release, a press release on crude oil inventories in the U.S. Okay, so if you notice, there had been one significant green candle, there had been two significant green candle, and then there had been a third significant green candle without any real consolidation. So when this candle was forming, it immediately dropped down to here, right? So I placed a stake. I put it at 77150, saying it would fall below that value. I said it would fall below that value, and it did. But then when it approached this horizontal line, it just stopped here for about 20-30 seconds. There was no movement, and at one point it even like bounced up a little before bouncing back down. So I placed a take profit order before the market shot back up. And as you can see, this candle, it's really hard to tell. Let's see if I can zoom in. My computer always gets slow when I record because my Mac isn't the best here. But if you can see, this is actually a cross doji. And generally, I find in these situations, another little tip here, if you find a cross doji forming followed by an immediate bearish response candle, then you can assume at least in the next 5 minutes the market will continue pushing downwards momentum-wise. So in the 5-minute charts, you can go ahead and say that the market will continue downwards, although as we can see, the overall direction of the market continued up for a little bit after, which is why I like 5 minutes, because if you find momentum, you can capitalize off it a lot. And the inverse is true here. We see a first bearish candle, we see a second bearish candle, we see a huge spike, and then there was consolidation, right? There was consolidation, but then the market dropped and ended up forming this upside down pin type candle right here. And so what that means is, the market was all the way up here. This was consolidation kicking in, but this consolidation kicked in too early in the 5-minute period, if that makes sense. It jumped up to this value within the first minute or so, because I actually took place in this trade as well. I was actually up at 10 o'clock at night watching this, and so this candle jumped all the way up here, and so I went and had bet that it would fall before the end of the 5-minute time. And honestly, I got a request that I show you these trades live, because timing is so key in these examples, because it's kind of hard to understand, but when the candle starts forming, if you see it drop down and then rise above, then the candle most likely is going to finish up here, right? But if the candle immediately rises above, then you can assume the candle would end down here in that 5-minute period, and that's hard to explain. And I'll start recording videos of me identifying these situations live and showing you what I think that is going to happen and what will actually happen. But these situations happen all the time, and let's see if I can get another example. I think there was a clear one on the Euro chart, not the Euro chart, but this Great British Pound chart. So we see here that the support was broken. There's a support, this yellow line, this was a daily open. This first red candle broke this support. The second red candle was a huge move downwards. And then this third red candle was a huge spike, continuing the bearish trend. And then there hadn't been any real consolidation kicking in. There'd been a little consolidation here, but not really. And so I knew after this third large candle that there would be some sort of consolidation. So this candle in the first 2 minutes, it dropped down to this value, but then of course it spiked upwards. So I placed a stake, I put it at 5.0. I actually went pretty risky on this one, but it had been a large move, so I'd expected large consolidation. And guys, the thing is, even if you get these contracts for like $15, right, or since this was a bid, you could have gotten it for 15. Even if the price jumps up to a 70, even if everybody thinks it's going to keep dropping, right, that's still a lot of money to make if you're a take profit type of guy. I personally don't take profits unless it's just a really risky situation. And so that's just one example. The other example is fairly simple. This is already quite a lengthy video. I'll try and cover this really quickly for you guys. But the other example of a great opportunity for out-of-the-money trades are at support and resistance levels. So let's say there'd been a large move upwards. My computer's loading here. Like I said, it's really slow. Oh, man, I can't even draw this arrow here. But so let's just say the market had moved upwards. A support level is established. And then basically what I'm trying to get is after the end of the 5 minutes, the candle would end up looking something like that. Because the value had already been rejected 2 times, and then the candle, you can kind of assume, so long as this green candle does not break this support level that is established by these 2 rejection wicks, you can assume it's not going to break the level. It's going to actually end below a certain value. And so you can place a stake here and make some money. And the key thing that I want to highlight with this strategy is if this candle actually goes above the value, if it actually ends above these 2 values, so let's say down here, let's say you had a wick, something like this, then you had another wick. If the third candle breaks, as you're watching it form, if you see it break above this support value, and I'm talking significantly above this support value, you can just go ahead and cancel your trade that you made and bet the opposite. Say the market's actually going to rise, because I found generally when it breaks this support level, the market will continue shooting upwards, at least by the end of the 5-minute period. And so I've got a couple examples of that. As we can see right here, a support level was established on one occasion. The market got rejected to fall below this occasion. Second occasion, the market got rejected to fall below this value. And then as this third large red candle was forming. It was trying to attempt to fall below this value, but it did not break this low that had already been established by this red candle. Right, did not break this horizontal line, so I went ahead and bet up that it would finish above 1.2285, which is about this value, this horizontal line that I'm highlighting, and it shot back up. And the same is true right here, right. There was a rejection wick on top of this candle. There was a large hammer or an upside down pin candle. The market tried to switch directions, got rejected, bounced back up, and then this candle tried to push the market higher, but I knew it wouldn't because there had been already two strong rejection candles and it fell back below. And so, like I said, this is just at support and resistance level. This strategy works really well. And let me see if I can identify a situation in which actually the market breaks the trend and actually the wicks fail. Like I said, just bet the opposite direction. I know there's one on the Euro chart. Let me see if I can find it. A support level was established, and the markets just continued shooting upwards. Like right here, I see there's a rejection wick. There was a second rejection wick saying the market wanted to switch directions. So I placed a stake at 1.0989 as this candle was forming. But then I saw that this candle broke above the high of this candle, if that makes sense. This wick, when this third candle was forming, it broke above this wick of this candle. And so I went ahead and placed a stake at I put it at 1.09910 that the candle would form above it, and it did. So like I said, this is kind of called momentum trading. Just try this out on your own. My number one rule is try with demo money before you try with real money, and obviously look at the overall direction of the market. If the market wants to switch directions, then pay heed to that. So this is just Pope Binary with another video. Sorry it's a lengthy video. I didn't mean for it to be this long, but there's lots of good stuff in this video, and try it out on your own. So subscribe for more, and I'll catch you on the next video.